economic interdependence. Basically, its impact on the financial markets these days would be not very easy to interpret, because we have, on the one hand, a transition from the west to the east, one way or another, and I think the tariff war is essentially one of the key indicators of that. It would be not very easy, because had the Western model of capitalism been working impeccably, there would be no need for the tariff wars in the first place. And then in whatever way one approaches what is going on in the United States, it has been one of the leading economies in the last decades, and it still arguably is. But the fragility that it has shown in terms of economic performance and in terms of the redistribution of the gains made by the national economy in the last 30 years has indicated that there has always been also a rift in between the high-tech sector, which has been leading the valuations, and other economic sectors. And I think that the rise of Trump indicates that that essentially those more traditional sectors which used to employ tens of thousands of workers have stopped generating surpluses, and they have been largely outsourced to East Asia, maybe to Canada, to Mexico, to other countries. And I think that right now what we're seeing under the guise of the tariff war is actually the revenge of that sector, of the underperformance of all of what has not been sufficiently covered by the Western news. And this means that basically, in case this trade war is going to essentially continue beyond the 4 years of Trump's period in office, if that will be, let's say, 8 years, it will mean that there will be a re-evaluation of the whole sector in the United States, and it may probably hit really hard the European industrial sector, as the America will become more insular, one way or another, as China will be more aggressively exporting to the markets it still can, and I think that will probably leave two clear winners. On the one hand, it will be China, as it will be supercharging its investment into new technologies, into the industrial value-added industries, technology, etc., and as America will become more insular, and as it will be simply seeking to shelter its markets from essentially the Chinese imports it can do without in the medium and the long term, and as America reindustrializes one way or another, so that one will be seeing, I think, a long-term resurgence in the valuation of the industrial firms and companies in the United States, and there will be a continued strength in the Chinese economy, purely as it will be seeking to expand its global market share, as it will be trying to reorient its economy from the export-led models to the consumption-led models. And I think there is a lot of future in that type of reorientation, and as services will be accounting for more of the output in China as well, so that even though there will be volatility in the short term, I do think that the upward trend in the markets will continue in spite of that, and I think that what we're seeing is actually is a reshuffling, regardless of whether they will be successful with China, America, tariff negotiations. I think that this goes beyond the narrow focus on tariffs, and I think that will be about how the national economies will be responding to the essential fracturing of the global economy into more regional blocks, and I think that will be a very long-term development and theme in how both large firms and smaller firms will be adjusting to the global restructuring, so that if early on one could think of globalization as a sort of very homogeneous playing field where firms were optimizing regardless of where the factors of production are coming from, and I think that was underlying the initial phase of globalization. Right now we have a lot of more fractured playing field, and I think that introduces a lot of heterogeneity into the economic models, into the thinking by the CEOs, by the advisors, by the major consulting firms, and that will be one of the trends as we will be seeing poles of growth, which will be operating both globally and regionally, and we can think about maybe UAE, we can think about Hong Kong and Singapore, we can think about European countries, and also in the North America, and say the same fish, let's say East Coast, West Coast, American cities dominating that, and I think there will be a lot of South American emerging markets, emerging cities in the global exchanges, and I think that we cannot really stop the rise of China, so that one will be seeing the growing accommodation of that on the regional and international basis.